Welcome to the Capital Spreads Weekly Update. Today is Thursday, the 11th of August 2011. And markets continue to be incredibly volatile at the moment. Even today, we saw a good recovery by European indices following that huge sell-off yesterday in the Dow. The FTSE was as high as 5,100 earlier this morning, but it's now drifted back down to the 5,000 area. In the past few days, we've seen huge swings in global indices. The Dow was staged a massive recovery on Tuesday. It was wiped out yesterday, and the markets have given up any small gains that they saw already. So calling the Dow to open a little bit lower. The futures really have dipped in the last few moments. So Dow around 10,750. On the currencies, Euro-dollar 141.75, cable 161.70, and for gold, which did head above, it did get above 1800, is just below there at the moment, 1785, and Brent crude also seeing its fair share of volatility, 105.75. And it would seem at the moment central bankers simply can't do anything to stem the flow of the selling. We saw at the beginning of the week ECB saying that they would buy Italian and Spanish bonds. That has had a good effect. It's really brought down their bond yields, but still hasn't done enough to quell the concerns that investors have about global growth. And in the UK earlier this week, we saw poor industrial and manufacturing data. We also saw Mervyn King, the Governor of the Bank of England, reduce his growth forecasts for the UK. Fully expected, but the picture ahead is rather a gloomy one, and concerns of a double dip have just increased somewhat. So very much a focus on support levels. As I say, we're around 5,000 at the moment in the FTSE. So support levels are seen around 48.20, 47.10, and then if we do get below there, there's probably not very much until 45.20. So how are clients trading at the moment? Well, they have been picking up the FTSE. They're not as long as they were. It's been incredibly difficult trading conditions for them. But tentatively buying in the currencies, interestingly, not much of a position there. Clients seem to be pretty much flat, unsure of where things are going, finding it tough to call at the moment. But for gold, clients remain long, but not as long as they have been in the past. Certainly quite a bit of profit taking around this area and certainly around 1800. And then the oil as well, clients just slightly long. So what have we got for the rest of this week? Well, we've got initial jobless claims today, which should come in around 400,000. And then tomorrow, US retail sales, as well as Michigan confidence. Now, the Michigan confidence has seen a plummeting of confidence in the US, and the hope is that there might be a little bounce tomorrow, but that's obviously from a very low base. And it would seem that for markets to turn around, for them to recover from these lows, they're going to need a serious shift in economic data. It's interesting that a lot of these surveys seem to have bottomed out a little bit, so maybe we've reached the end of the decline in confidence numbers and growth numbers, but there's still an overriding concern. We need to see a big shift. So these are quite key bits of economic data for the rest of this week. Theme of this week, well, we showed you a chart last week of the break below that uptrend, and that triggered off a huge sell-off, which we've seen. And so this chart today shows you that massive correction that we've seen. Have we got further to go? The big support area that I mentioned just earlier, 45.20 in the FTSE, that's pretty crucial. And we could potentially test that, but we will have to wait and see whether the 5,000 area can hold up for the moment. It looks like any rallies are pretty short-lived. So even though valuations are incredibly cheap, and a lot of analysts and fund managers are saying, you know, that the valuations are way below historical averages, it doesn't seem to be able to stop the selling. So we'll keep an eye on that, and as ever, do give us feedback. That's it for this week. See you next week.